Welcome to Bears in Exile. Today is Thursday, January 5th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV, and we'll throw it in with XOY and GE just for good measure. Okay, so not too much today. I did find it really interesting. I mean, it went down significantly today, got to the upper price consensus level, bounced off of it. That is bullish, absolutely. We ended with a very long no body hammer today. And what else do we have besides this? Well, we have the CCI backing off. We have the 14-day RSI moving average getting right to almost to overbought. Stochastics are still hanging out, waiting for the 14-day to finish its move. RSI is overbought, up on the histogram, and a side tick on the, side tick on the histogram, and uptick on the MACD. We still have those divergences in the 60-minute time frame, negative divergence. Let me bring that up. And in the stochastics, in the 14-day RSI moving average, in the RSI, in the MACD histogram. So just waiting for that to play out. I think that it will. We do have some conflicting signals, but we'll go over that. Beyond that, we can see a little bit of wobble in the down, the short-term moving averages. But I mean, by and large, this does look rather bullish. And will the candle be enough to turn it around? Are we close enough with the stochastics and the 14-day RSI that they're going to start their move down? Maybe a little bit early, but nonetheless, tomorrow is the jobs numbers. Everyone is anticipating that with expecting something wonderful or something, but we're going to see. SPX. All right, now we have something a little better to work with. We have a very clean hammer. We have a little bit of excessive separation, a little bit of wobble in the short-term moving averages, but really nothing major. That does look rather nice overall, with the exception of the candle formation. Just like the Dow, it came down, hit the upper price consensus level, bounced off of it today. Everyone's expecting something, wonderful tomorrow. Does that mean that tomorrow is being front-run? We're going to examine that a little bit better here in a moment. But what do I mean by everyone front-running today? I'm going to show you here in a minute. We still have yet to break this previous high, and certainly it could be. It could break. Sure, anything can happen. I do think that we need a test of the 200-day moving average at some point if this rally is for real, but nonetheless, we don't have any indication of that as of yet, except for the candle formation. Just like the Dow, 60-minute time frame has negative divergence. No need to zoom in on that. Here we are with the VIX. Man, the VIX just can't get it together now, can it? Big ugly day on the VIX once again, getting just below 2150. Is it going to be able to hold the previous floor just above 20? We're probably going to find out real soon if we don't reverse immediately, but regardless, it's pretty interesting. 14-day RSI moving average ticking down again, ticking down in massively oversold area. Amazing. Stochastics also moving on down, along with the CCI, along with the RSI, along with the MACD histogram, along with the MACD. Are people front running tomorrow? We're going to get to that here in just a second. TNA. Amazing move in TNA today. I mean, getting all the way down to sub 44 just by a hair, and closing the day up at almost 47. What a move. That is incredible. We did take a short position in TNA today, and that is one of our 4 fun trades. I think it has good odds. It has odds, too, that it isn't going to work out, but nonetheless, 14-day RSI moving average ticking up, along with the stochastics, along with the RSI almost at overbought, along with the histogram, side tick on the MACD, side tick on the MACD histogram, uptick on the MACD, down tick on the CCI. But what a move. That was really neat. Cleared the upper price consensus level today. It does, at first glance, look bullish. Absolutely. All the short-term moving averages pointing up. We don't have any real wobble or excessive separation at the moment. We do have all of these previous peaks to break, but nonetheless, doesn't look too bad at first glance. Yes, there are negative divergences still in the 60-minute time period, and we can see those with the 14-day RSI moving average. We can see it with the stochastics. We can see it with the RSI, um, the MACD histogram, etc. Just like the Dow, just like the SPX. Now, about that front running, because this is the important or interesting part, I should say, of the video tonight. Here we are with UUP. Massive gap up, closed at the upper Bollinger Band. When the dollar goes up, the market should not do well. Well, the market didn't do much of anything today. I mean, Dow down almost 3 points, SPX up 3 points. With this being up this much, the market should have been under considerable pressure to be down, and it wasn't. It was flat. So there is a lot of optimism at this moment for everything just to run up. And maybe it will. Maybe the smart money is right. Maybe the retails are right. But regardless, shouldn't have acted that way. Not in my opinion. CCI overbought. Going down on the 14-day RSI moving average, going up on the stochastics, going up on the RSI, going up on the MACD and the MACD histogram. And it's going to be very interesting to see how the jobs number is received tomorrow. But regardless, we have a little bit of conflicting signals here with everything trying to go up in the face of the 14-day RSI moving average. It is pointing down, which is good for the markets. But, you know, everything is not always moving in tandem with the 14-day RSI moving average. We want, you know, we have good moves when everything is aligned normally. But regardless, market should not have been the way that it is today with the movement of the dollar. FXE, yep, confirming the move in the dollar, getting below the lower Bollinger Band by a significant amount, making a new recent low. CCI very oversold. 14-day RSI moving average still not ticking up. Down on the stochastics, down on the RSI, down on the MACD, down on the histogram. Not attractive. Now there has been some talk with the talking heads in the media that the euro is going to be going down to 1.2, which is 7 cents down from its current position. That would be poor for the markets. Certainly we have the short-term moving averages pointing down. It's below the lower price consensus level. We have the 14-day RSI stuck. Everything's trying to go down. It has room to go down. Some of it does, not all of it. But regardless, not pretty. Not pretty at all. And so, are we pricing in action for tomorrow? I think it is extremely likely. With the euro going down, the market should have been going down today. Now that it is below the lower Bollinger Band, it should snap back in today. Or tomorrow it should snap back in either with a side movement or a slight up or a slight down. But which at first glance you would think that's going to be good for the markets. But tomorrow is an NDE day with the jobs numbers. GLD, yep, going back up for its test of the 200-day moving average, proper test, something which really needs to happen. This is confirmed by the 14-day RSI moving average ticking up. Stochastics already almost at overbought, along with the CCI, RSI climbing up, histogram climbing up, MACD with a bullish cross climbing up. Very nice. It will be good to see it break the 200-day moving average and do a proper bar retest. I don't think there's enough room for a complete crossover prior to entering the bar, but nonetheless the bar is not, it has some strength to it, but it could be a lot worse. It could be like over here. So we're going to have to wait and see. And this would also suggest that either fear is increasing or the dollar should be decreasing. So we know that the 14-day on UUP is the right movement in the longer or intermediate time period. Perhaps not in the short time period, but anyway, this is what it is. SLV getting to the major price consensus level and backing off slightly. Getting an uptick finally on the 14-day RSI moving average. Essentially everything pointing up except for the CCI. Looking at oil. Oil has had quite a good run today, getting red and getting a very slight downtick. A bearish move on oil is bearish for the market. We have a downtick today. It increases the odds of a very near-term downturn in the market. If we get that downtick actually resolve itself, which would be a retest of the 200-day moving average, and that would be healthy. 14-day RSI moving average is still pointing up, so oil apparently should be going up in the intermediate time period. CCI, stochastics very high, RSI overbought, downtick on the histogram, and uptick on the MACD. So we could have a movement in oil to the downside, bad for the market. And GE ending with a hammer. No downtick. And we look to GE to get a predictive insight into the Dow. We can see that we have some excessive separation and a little bit of wobble in the short-term moving averages. A retest of the 200-day moving average would be completely natural and healthy. It would only be a bubble corrective move at this point. So not a big deal if we were to get that. You can see the 14-day RSI moving average very overbought, along with the stochastics, along with the CCI, along with the RSI, very overbought. Downtick on the MACD histogram, uptick on the MACD. So absolutely, we could have a bubble fix over the next, half week or whatever. But that would be bad for the Dow and contributes slightly to the thesis of people front-running tomorrow's jobs numbers, which we will be at the mercy of no matter what. And there it is. So that is the overview for tonight. Hope that everyone is doing well in the market. We're going to see if those for fun TNA puts play out over the next couple of days. I think hitting 44 again would be very nice. But as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.